Hi, Rohit. Welcome back.
Hi, Dale.
Welcome back, Rohit. Great to have you.
Yeah, pleasure to be back.
Yeah, so what's top of mind in 2023 as we wind up the first month, which was a pretty good risk-on month for the S&Ps out of the gate, had a very good January. Why don't you share your screen and let's see what kind of wave counts that you're considering here going into a new month.
So, a lot of game changers happening here. I'm being forced to consider what you always ask me for, which is alternate wave counts. So, I've actually been considering a lot of alternates in the last month based on what is changing continuously. We had, and one of the things which drove me to change my equities view, we do need some additional confirmations to come through, is the extreme negative sentiment, both in the Indian and US markets. The put call ratio based on the volume of puts traded by the volume of calls traded reached an extreme number. And that became one of the primary reasons. So I'll just showcase that chart. Here it is. This is, of course, the S&P. This is a history of all the high readings, and each one has been followed by multi-month advances in the market, if not multi-week. Some of them have lasted for a short period, but many of them have lasted for a much longer period. And so that sort of pushes you back to think whether something different could really be happening. I mean, for a year we've tried to think about whether we've actually popped this bubble in growth stocks and so on. Yeah. But this kind of extreme sentiment should have occurred either at a lasting bottom, or if this is a continuation of the bear market, we shouldn't have been bouncing right back above the 40-month average, which we have done, which didn't happen in the last two bear markets. And so that's sort of at a tricky point where it means that there is a chance for some reason, what will change, we'll see that we could actually start a rally that can retest, not just end up being a retracement, but even retest the highs. And that is a risk that I'm trying to consider one step at a time.
Let me ask you this. Is there a count
yes.
now that we are an alternate count that could take the S&Ps back to 4,300 or take out that high marginally and then fail from there? I think it's called an X wave if that happens.
So I'll show you both the counts. This is the first chart. This is, of course, the NASDAQ. This is where the weekly RMI is basically I call it the Rohit momentum indicator. It's a smoothed rate of change indicator with some more indicators put together. Now, essentially, what it's showing is that we've piercing the this slightly dated chart. We are piercing the 20-week average, heading towards the 40-week. I think we've crossed that as well last week. And in terms of wave count, so initially I was trying to think, that this entire fall is essentially a leading diagonal, a series of 5-3, 5-3, 5, but it just went on. And as it went on, we actually forced to think, that maybe it's not that. The alternate, as you ask, is likely to be a more complex pattern. So here I'm using the S&P to show a more complex pattern where everything is overlapped. Which means instead of ending up as a 1, 2, 3, 4, 5, we actually ended up with W, X, Y, X, and Z, which sort of means we may have completed Z. And if it is an expanding triangle, then this is typically a third and a fourth wave. We have broken out of this falling trend line right now. We've almost come back to this previous high. So there's a good case for this to be an initial. First, I thought, okay, if it's counter trend, it'll be ABC, some larger X. But what if it ends up being a larger, fifth wave of something which is pending, and then only we'll actually see things roll over. Now, a lot of this will depend on how the economic factors also kick in. So this is how the alternate would look like. That the triangular structure is just a fourth, and you have a fifth pending on the upside. So this is what I'm trying to think. The bearish case is, of course, you just retrace 61% of the entire fall and then lose momentum, and you go into a recession. But if that doesn't happen, if you end up with a soft landing, things turn easy and you can actually generate a fifth wave, then it might
Melt
look,
up. It'd be a melt up.
then there will be a
6,000. Yeah.
Yes.
Okay.
So
I'm hearing more melt up talk, and they've canceled recession forecasts in Europe. They're beginning. All right, I'm just saying they canceled it. I mean, it's
So
not
this
like
is
they had a trade on. How do you cancel a forecast? You change your forecast, and they're all now. Everyone is in the soft landing camp. Many, the majority, not everyone. Majority now coming to the soft landing scenario in the U.S.
yeah. So this is a chart of the FTSE since you mentioned Europe.
It
And
made a new high, all-time high, right?
Exactly.
All right.
And so I ended up drawing a channel and considering that what if this is again same thing, fifth wave in progress.
Yeah.
And if that is true, then we've sort of delayed some of the eventualities out here. So at least we bought ourselves some time, if nothing else.
Okay. Do you have any kind of, I think the most contrarian trade, especially now that melt-up's back on the table, is long volatility, because it didn't work all last year, although we had 25, 30% declines. It never really worked. We really never had a capitulation move with vol getting above 35. People are now saying they're not going to hedge anymore. It's a waste of money. And, that the VIX is broken. And even during the decline, the people who made money were shorting volatility. I was wondering if you had any kind of count or any kind of view on the VIX, which has gapped up this week. I'm not saying this is the low, but I certainly wouldn't be short volatility here. And considering call options going out to June, what's your thought on the VIX here?
So you can't really do a wave count on the VIX because it's never trending in a particular direction. What you can do is look at certain ranges, support, resistance. Does it stay above 20? Does it go below 20? Because when it goes below 20, you get trending bullish phases. My hope in the bearish case was that it wouldn't fall below this line, because that is exactly what happened in 2009. So when I looked back at this scenario, even 2020, if you had a base support line that eventually led to this big wall explosion. The same thing happened even in 2009 bear market, where at this point, once we had this base, we didn't go below it. So which is why I'm a little surprised that we have actually gone below it. And so I'm not really counting on a big spike.
Well, we're back above it now. Maybe that was a false breakdown. Now, as of today, we're back above it, aren't we?
Very, very tight. So it's like, just kissing there. But what happens?
Isn't that nice? The VIX will kiss you before it takes away your money. So nice. Okay.
But sometimes if I just take periods which are bullish, what ends up happening is that you do get wall spikes, but they don't end up being big, So there's just short-term panics and then the bull market goes on. So you have many of these small spikes. So I can't rule out you get a spike here, but now how do I really guess that you're going to get something which is large? So for that, we will really look for additional confirmation from the S&P or the Dow itself, I think, or the dollar itself. I mean, one of those things. We have, of course, been watching many moving parts. You have the bond market, you have the dollar, you have the equities themselves. And the dollar, which was the other big one itself, has, gone right back below what I was calling. So I think a year or two back when we were talking, I was saying that, we are in a dollar bear market. And I thought this last dollar bear market was 7 years. And I thought this would go on for 7 years, maybe much lower. That didn't happen. So 2020, 21 ended up being the end of that phase. So within 4 years, all the boom we saw in commodities appears to have ended. But here's a massive long-term intermarket divergence. This big spike in the dollar hasn't really led to a crash in commodities, whether it's oil, whether it's copper, whether it's gold and silver. Yes, there's been a correction, but it's not essentially a crash. And I think that's telling us something, which is sort of why I've changed my dollar index wave count. You were questioning me last time that what if it falls below 102 or 103, which is the breakout point. And now that it has, then what does it really mean? It means that the dollar spike ended up just being the false, breakout, at least for the time being, till we have fresh evidence on this. So what I've tried to
bearish is dollar now.
There is the dollar for the time being. So I tried to think, just like 1990, you had this extended bottoming phase, which ended somewhere here. Maybe this is an extended bottoming phase here up to here, and then you can have 5 waves from there. And if this is complete and you do a 61% retracement, you will retest the 89.90 mark. So this can be a prolonged, nice ABC pullback before you resume any further dollar bull market. So it's just one of the possibilities.
Okay. So gold had a big run and silver had a big run with the weak dollar. I believe last time we talked, you weren't as convinced about the bull case. Are you now?
I am more convinced now. So I was waiting for maybe a potential X and Z over here. And I thought maybe if that happens, we will go back to a 61% retracement mark. In the interim, this current rally has been strong enough to push my momentum indicators, say, on a higher time frame. So I'll just show you on a monthly time frame to buy crossover. Okay, so this is the monthly close coming in. I think for the current month, it's crossing over. It's not complete yet, but I think it will happen. I mean, today is the close, right? So today is 31st. Yeah. So I think you'll most probably get a confirmation that I have a buy signal on the monthly momentum cycles, where we've taken support, I think, at this lower band as well, very similar to what we did in 2018. So I'm sensing that probably the fourth wave, which is, if I think of this as 1 and 2 and think of this as 3 and 4, then fourth wave is probably complete here. Then we are starting the fifth of a larger degree. So this is what I'm starting to think about.
Okay, shorter term, where you've peaked short term under 1950. Do you have any levels based upon your longer term count that would be an area to look to enter the long side of gold if we get a correction?
So very short term setup is to watch the 20-day. Okay, because we did hold the 20-day average here and take support. Are we going to continue to do that and extend? Or if we break this, so I'll just give out that level. If we break this, then we can come down. I'm not sure whether that will happen. 1900 is the support. If you break 19,
we got down to 1902 today.
So if we break 1900, then we may get lucky of getting 1860. But it has to close below 1900. If it doesn't close below 1900, the possibility is that it may just take support there and continue to extend on the upside.
Okay. All right. And oil, which is, I think the last week has been pretty negative. Is there a shot for that $70 level to be violated with your work?
Yes, so I am looking at buying the dips in oil. I think it has started what is slowly looking like a trend reversal. And the question is, at what point should we make the next entry? I think one of the retracements, the 50% retracement and 20-day would come somewhere close to $83. 61% could be $82. So we'll keep those two levels in mind. Give it a couple of days, let it stabilize, and show us.
We're under 82. We've gone to 77 on WTI, if that's what you're showing.
This is I'm showing Brent.
Oh, I see. Okay.
The reason I've started using a Brent chart is because it doesn't have that big spike down to $7, which we can.
You mean the negative print?
Negative print. And so it gives me a very clear channel and wave count. So when I'm looking at this big picture, I'm able to see that, okay, we got a 1, 2, 3, 4, and 5. And after that, we've been in a corrective mode. And then from there, I've done W, X, Y, X, and Z. So this Z sort of completes the correction. I would have really liked if we touched the fourth wave of, previous low, which was around $65. I was actually waiting for that. But since
it still happen, couldn't it?
Yeah, it can still happen, but since we took support on this line, I have backed off from that for the time being till it actually shows up.
Well, you know what? The most important thing I gleaned from it, besides, not caring about the short term, on your count,
Yeah.
that whole rally was only one.
Yes, that is right.
Okay. And this whole thing is two.
Yes.
And the third wave is always the money wave that could be a
Yes.
fib extension
Yes.
of one. So that projects, gosh, what, 180, 200? If we have something like that from 7 to 150 and then 1.618.
If wave three is even equal to wave one, it's hundreds of dollars
Oh
higher
my goodness.
because it's in
Wow.
percentage terms, right? A percentile scale will be very high. If I do it point terms, definitely it won't be that big. But if I go with a log scale, then it's pointing like way off.
Yeah.
So this was sort of what I started out with when I was thinking the dollar is bearish, that the commodity cycle would have changed permanently, which we can see in the 5-wave advance in oil. We can see it as a 5-wave advance in copper. Copper is in fact so interesting that it only retraced exactly 61% of the entire advance that it made in 2020-21. So it's been a pretty exact retracement. If we take the entire run up, exactly 61% taken, and there the daily sentiment index here I've put it was 7%, which means there are only 7% of traders bullish from where it's moved up. Now the only thing which has happened is it's moved up to the 61% retracement of the fall, and so this is where the bulls and bears will have a little fight.
But
And
that measures way over 5.
Yeah,
that measures what, $7?
In terms of the third wave,
Yeah.
It will measure well above $7. Yes.
Yeah.
So I think that the entire commodity complex was waiting for that. I mean, the risk was that if the dollar kept going up, then most commodity prices would have retraced more than 61%, gone to an 80% retracement or something. But it looks like all of that is backed off. Yeah. So this is coming to around $7.8. Yeah.
Okay. All right. I can't think of anything. How about yields? You have a view on the bonds or notes?
So for the time being, when we think, so I think everything is going to be based on the speed at which things happen. If I look at the 10-year, I have just written a note today. Right now, it seems to be building up to move higher. Now, whether I should take this as A or I should take it as 1, this is just the initial wave up. We've had the first rally. We're sort of consolidating, I think, A, B, C, some kind of consolidation. I do think it will move up in 3. This is, of course, the bond price, not the yield. Okay. So if it moves up, which means yields go down.
Right.
Now, we can argue at what point will rising commodity prices become a yield problem. But, if you look at the last commodity cycle, 2002 to 2010, it wasn't really an interest rate problem. So the real reason behind the big inflation this time may be very, very different. If we can get prices to move at a slow pace, I think that's going to be the real objective here, because, higher prices are sort of been considered the solution since they started talking about MMT to solving the debt problem. If you don't want to default, you have to get inflation. The problem is if you get too much inflation or too fast. So the solution is to get it slow. If you can get commodity prices moving up slowly, then I don't think we get a major bond market shock.
Well, your wave count in Brent certainly argues against that.
I know. So what I'm trying to say though is that probably that has to happen much more slowly. We start thinking of it going up hundreds of dollars and will it happen in 1 year or will it happen in 10 years? I think that's where the catch is going to be. Okay.
All right. Well, eye-opening stuff today, Rohit. So really appreciate your views. I consider your work. I've seen some Twitter comments. Just, ignore those. I consider your work elite. And I know Blake does. And our whole crew, we pay attention when you speak and show your pictures.
Thanks a lot. So I'll just highlight how this is playing out in the Indian context, there's been a lot of controversy. I'm sure everyone's heard about what is going on. So what was happening before this controversy showed up is that just like we saw the very high put call ratio readings for the US equities, the same readings are also there for the Indian equities. The only thing is Indian equities, they did bottom at the, along with the world in probably late part of December, but they didn't rally. For some reason, they just couldn't get above, the Nifty couldn't get above 18,200. It made multiple bottoms at around 780, 17,800. And then the most recent news around the Adani Group, which is one of the large conglomerates, came out and sort of crushed the stock. But it looks like it was all around their, IPO where they're raising additional money, which went through today, 100% money. They managed to get institutions to fund them. So retail investors stayed away out of fear, but they got institutional support. And so the IPO didn't fail despite all the news flow. So that's the good news. Tomorrow, we've, of course, got the union budget, which is an annual event. And the history of this union budgets in India is that whenever markets have, there's a lot of sentiment. People usually expect some kind of reforms or additional money spending by the government. And markets tend to reverse around that time period. It's like almost with a 90% repeat process, which means that if markets are falling ahead of the budget, they often tend to bottom out because some of the worst is already discounted and then they turn up. Sometimes that markets head right up into the budget because they've been rallying for the last few months. Then they tend to peak out over there because, most of the sentiment is discounted and things roll over. So it's just sort of been the history at least 80% of the time. So I think, given this extreme sentiment, and now that sentiment has got even worse thanks to the Adani fiasco, which is now behind us today because the FPO is fully subscribed. The setup is for a complete reversal starting with the budget tomorrow, which means I think the Nifty shakeout in terms of the Nifty index is done and we should start heading higher. So I'll just open the Nifty chart. The Nifty chart's been pretty ahead, I think, of global markets because it moved to an all-time high in November, December. It had a very similar complex correction like what I'm trying to do on the S&P, W, X, Y, X, Z, and expanding triangle, already complete at the bottom of June. And then it made its first attempt to break out of that in August and then finally did so in October. Now this most recent pullback is coming back and testing exactly this line which it broke past. Okay. So we also have some gap supports which I've marked on this chart.
All right.
So my sense is this panic is done. We can see the panic volumes at the bottom. So it's kind of a selling climax.
Yeah.
And we will be starting a third wave of the ongoing bull run. So I'll just take a blank chart to sort of put a projection of what that means. Which means, again, this triangular structure most probably is a fourth wave of some degree without really getting into what degree. What I'd want to think of is this is wave 1 and wave 2. And what we are looking at as a minimum is a third wave where we start a rally from here towards around 21,600 in the coming weeks to months.
All right. So bullish India. Buy panics. Buy when there's blood on the street.
Absolutely. I said that on television and they said you're sounding like a fundamental analyst.
Oh, yeah. Well, throw a few drops of blood on your chart and then it'd be technical. So anyway, I think we all have left some blood on our charts. So anyway, I love that expression and really love your work. Thank you so much, Rohit, for being here today and sharing your work with our community and giving us some nice macro things to use in our narrative. Appreciate it.
Thanks. Welcome.
Okay, so my trading warrior brother, Rohit Srivastava. How was that?
Good. Close.
Good? Huh? Not bad? Huh?
Yeah, it's close.
All right, everyone. Thanks, Rohit. And you could join the team in 17 minutes for the morning edge. And don't just count your rupees, count your blessings. See everyone tomorrow.
Hey traders, this is Blake Morrow with ForexAnalytix. Thanks for stopping by our YouTube channel. Don't forget to like these videos, share them, and subscribe to our channel so you don't miss any of the content that we provide here for free. Thanks for stopping by. I'll see you in the next video.